Hello everyone, hope you're doing well. Welcome to the second video. In the previous video, we discussed about the tax rate applicable for various SSEs. In this video, we'll be discussing about the new tax regime and we'll compare it with the old tax regime. We'll talk about various theoretical parts and then we'll move on to some practical aspects. So, let's get started. New tax regime or old, what you should opt. As you know, the budget 2020 saw the finance minister Nirmala Sitharaman announce a new tax regime with more tax slabs and lower tax rate. This was long demanded by most taxpayers, but it came with a twist of removal of all deductions and exemptions available. Over the years, government, through additions of clauses to the Income Tax Act, has given Indian taxpayers over 70 exemptions and deductions through which they can bring down their taxable income and hence pay less. Most common exemptions and deduction availed by Indian taxpayers are as follows. You must have heard of some. So let's see the list. Exemptions: house rent allowance, leave travel encashment, leave travel allowance, mobile and internet reimbursement, food coupon and vouchers, company leased car, standard deduction under section 16, uniform allowance, leave encashment, and some of the deductions are as follows. Public Provident Fund, better known as PPF, equity linked savings scheme. Then you have Employee Provident Fund, that is better known as EPF, life insurance premium, principal and interest component of house loan, children tuition fee, health insurance premium, investment in NPS, and saving interest. So let's see the tax slabs in the old regime and in the new regime. So there is no change in the first bracket of income from 0 to 2,50,000. It will be taxed at 0 rate. From 2,50,000 to 5 lakh, it will be taxed at 5 rate under both the regime. Then coming on to the third, from 5 lakh to 7 lakh 50,000, it will be taxed at 20% under the old. It was being taxed at 20%. Now it will be taxed at 10% if you opt for the new regime. From 7 lakh 50,000 to 10 lakh, it will be taxed at 15% in the new regime, whereas it will be taxed at 20% because in the old regime, as we have talked in the previous video, so if you haven't seen the previous video, do see it before watching this video. So if you see in the old regime, it was from 5 lakh to 10 lakh, it was being taxed at 20%. Now they have divided it into two parts, where they have divided from 5 lakh to 7 lakh 50,000 and 7 lakh 50,000 to 10 lakh. Income from 10 lakh to 12 lakh 50,000 will be taxed at 20% under the new tax rate, whereas it was being taxed at 30% under the old tax rate. Then they have again given a bracket of 12 lakh 50,000 to 15 lakh to be taxed at 25%, and income above 15 lakh will be taxed at 30% under both the regime. The combinations of exemptions and deduction can bring your taxable income by lakhs. However, it also means that every year you have to find ways to optimize your saving so as to keep your taxable income to the minimum. Now, as you can see under the new system, income between 5 lakh to 7 lakh 50,000 would be taxed at 10%, while income between 7 lakh 50,000 to 10 lakh would be taxed at 15%. This was 20% of tax of the entire range for the existing regime. So under the existing regime, it was 20% for the entire range. Now it has been divided into two broader parts. The earlier 10 lakh plus slab, which you paid 30%, has been broken into three parts with a rate of 20% for 10 lakh to 12 lakh 50,000, 25% for 12 lakh 50,000 to 15 lakh, and 30% for 15 lakh and above. So, which regime should one pick? Unfortunately, there is no single answer to this, and the culprit against it is the complexity of the tax rate rules. Although looking at the reduction in the tax rate, the first reaction would be that the new system looks better. Wait, while figuring out what option to go for might look complicated if you approach it in a systematic way. It is not that difficult to figure out. So, follow some of the steps I have mentioned. Follow these steps. Calculate all the exemptions that you are availing. If you are living on a rent, you would be claiming HRA, which is the biggest salary exemption one enjoys. Apart from that, other tax free components include LTA, food bill, etc. All these will become taxable if you choose to shift to the new regime. So, under the new regime, you won't get these exemptions. The second step, look at the deduction that you claim. As a salaried employees, two deduction that you automatically get are the standard deduction, which we have already talked about, which is of 50,000 and your contribution towards your EPF. In the new regime, you won't be able to get them, even though you will contribute to the EPF. Over and above, you cannot claim deduction against your home loan if you have one, or insurance policies, which till now has helped reduce the taxable income. Combine then, as a third step, combine these exemptions and deduction and minus them from your salary to see what is your taxable income and what would be if you let go of these deduction. This should be the deciding factor for which regime you should go for. So whenever you are deciding for opting either for the old or the new, you have to make calculations under both the regime, and then you have to make decision for yourself. Now we will look into some example to see the impact of not availing the exemptions and deduction under the new tax regime or on a tax liability. Okay. So the first example, in this example, there are few exemptions and deduction which the assessee is claiming. Manoj is an employee earning rupees 8 lakh a year. He contributes towards EPF and also gets HRA benefit as he is living on rent. He is also eligible for LTA, and this year he incurred 25,000 on his traveling. Let's see which tax regime will save more tax for him. So here is the old tax regime and here is the new tax regime. His annual income is 8 lakh. Under the old tax regime, he'll get the exemptions and deductions. So he'll get standard deduction under section 16 of 50,000 rupees. He'll get deduction of EPF contribution, which is under section 80C of 25,000 rupees. He'll get HRA of 30,000 rupees and leave travel allowance of 25,000 rupees, which he has claimed. So his net taxable income will come up to 6 lakh 70,000 under the old tax regime, whereas under the new regime it will be 8 lakh. Now let's calculate tax on it. Now looking at this, you may find that okay, his net taxable income is 670 under the old regime, so he should opt for the old regime. But let's wait for the slabs and we'll decide based on the tax. So here are the taxable slabs. These are the old rate, the new rates, and the tax calculation accordingly. So from 2,50,000 to 5 lakh, it is taxed at the same rate. So 12,500 here and 12,500 under the new one. From 5 lakh to 7 lakh 50,000, it is taxed at 20% under the old and 10% under the new. So there is a difference in the tax. Then from 7 lakh 50,000 to 10 lakh, it will be taxed at 20 under the old and 15 under the new. So it is 7,500 under the new. It didn't came out in the old one because his total income was 6,70,000, which was already covered in the previous slab. So these are the total taxes. Then we'll add cess it at 4% on the total taxes. So these are the things. Now you will find that there is a difference of 1560 under the new one. So he is benefiting if he is opting for the new regime. Now let's see another example so that we get more clarity. Now in this example, the assessee has availed major exemptions and deduction. Bharti earns 13 lakh a year. She is a software engineer. She contributes towards EPF and she has invested 40,000 in tax saving mutual funds and purchased a term life insurance with a cover of 1 crore. For this, she has paid premium of 10,000. Moreover, she is also eligible to claim tax exemption of 30,000 in HRA, 20,000 in LTA, and 26,400 for meal coupons, respectively, in her taxable income. EPF contribution, which is mentioned over here, is 35,000. Now let's see how his taxable liability changes in either of the tax structures. So under the old tax regime and under the new tax regime, annual income is 13 lakh under both these things. Under the old tax regime, she'll get standard deduction 50,000, section 80C deduction 75,000. 70, how come it is 75,000? 40,000 for tax saving mutual funds and 35,000 for EPF contribution, which combines to 75,000 under section 80C. Then she'll get HRA deduction, meal coupon deduction, leave travel allowances, and her net taxable income will be calculated accordingly. It comes up to 10,98,600 under the old scheme and 13 lakh because no deductions are allowed under the new regime. So it comes up to 13 lakh. Now, applying the tax slabs, we'll calculate tax accordingly. So for income from 250 to 5 lakh, there's no change. For income from 5 lakh to 75,000, there will be a tax change of 25,000 because it is 20% under the old rate and under the new it is 10%. From 10 lakh to 12 lakh 50,000, it will be taxed at 30% under the old rate and 20% under the new rate. So another big difference comes up over here. Then from 12 lakh 50,000 to 15 lakh, it will be 30% under the old rate and 25% under the new rate. Now, Bharti's income under the old tax regime is 10,98,600, which is already covered in the previous bracket. So it will not apply here, but under the new regime, since it is 13 lakh, then this bracket will also be applicable and will be taxed accordingly. So now let's see the total taxes. It's 1,42,080 under the old one, and 1,37,500 under the new regime. Adding on to the cess, which is 4%, the total tax liability. So there is a difference of 4,763. So again, this assessee is also benefiting from the new regime. Coming on to another example. Now in this example also, the assessee is availing major exemptions and deductions. Ram earns 20 lakh annually. He avails full of 1,50,000 limit of section 80C. So section 80C has a total limit of 1,50,000, which Ram is availing through a contribution of EPF and ELSS mutual funds. He bought health insurance for which he paid a premium of 25,000 that he claims as tax deduction under 80D. He also made investment of 30,000 in NPS. He also claimed LTA amount of 25,000 which is tax exempted. Now let's see which tax regime will give more money in his hand. Again, going on with the calculation under the old tax regime and the new tax regime. Annual income 20 lakh, standard deduction which he'll get under the old regime 50,000, section 80C, which the question has already told that he is availing 1,50,000, HRA 50,000, health insurance 25,000, leave travel allowance 25,000, and NPS, which comes under section 80CCD, it is 30,000. So net, this is the taxable income, which is 16 lakh 70,000 under the old tax regime and 20 lakh under the new tax regime. Now calculating the taxes. So it's the same thing which we have already discussed in the previous examples. The same way we will be calculating the taxes. We'll see that the total tax which comes out before cess is 3,13,500 under the old regime and 3,37,500 under the new regime. Adding on to the cess, now in this particular illustration, there is a difference of 24,960, and the assessee is benefiting from investment in the old regime. Okay, so he's benefiting from the old regime. Now, how we should decide whether the old regime is beneficial for the assessee or the new regime? So simply we have to see it from the assessee point of view. So from one assessee to another, it may be beneficial. For some, it may be adding to an disadvantage. So while calculating your taxes for the coming financial year, you should calculate tax based on both the regime and then decide accordingly. An important point here is that we shouldn't look only for tax savings but for investment as well. So if you are investing a handsome amount and you are not getting that much of tax exemption, it's okay, because what's important in a long run is your investment. And from the Indian economic point of view, investments are regarded more beneficial in the later part of the assessee's life. So one should decide very carefully, and hope you like this video. If you have any questions, any query, if any point I missed or anything you didn't understood, please comment it. We'll see you in the next video. Please like, subscribe. Thank you.